Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group, and welcome to Tuesday. How you doing out there? Man, it's so many things to try to wrap your head around. We've got the climate change meeting of the century going on. Apparently, Joe Biden has been escorted out of the building. He was in a meeting with Jeff Bezos and Leonardo DiCaprio. Now, I don't know what the heck Leonardo DiCaprio. Anyway, hey, I guess when you're famous, that's how it works. And, of course, Jeff Bezos in the meeting with the president, don't worry. There's no like that happening over there as all the billionaires unite there. I don't have any other details. My guess is somebody pulled the fire alarm or something, woke him up. I don't know if you guys saw Sleepy Joe. He got a little tired yesterday, took a little power nap. But again, I probably would have done the same thing, right? Someone up there yakking and boring me to death. Like a little power nap, but we'll keep you posted there. I just, again, I don't understand it. I mean, I don't know, Jason, am I wrong? I mean, can Leo help us?
I don't think so. I'm still stuck on his visit with the Pope, which we'll avoid. I'll wait till the later show to talk about.
yeah, you wait for that for the later one. Yeah.
I watched Glenn Beck talking about that. I couldn't stop laughing. So definitely that guy's got some problems. Whichever clone of Biden shows up that day.
Yeah. So anyway, that's what's happening there. We got a Fed meeting today. This is it. I think we're going to, and I've been saying this now for the last couple of months. This is going to be whether, as Jay said, I don't know if they're going to taper or not taper. I think they will. But either way, this is probably, it's either this meeting or the next meeting. Because if they don't taper this meeting, we got, it's like Groundhog Day. You got 6 more weeks of winter. But once that decision has been made, I think that's wherever we are, immediately following because tomorrow is the official notice. And they like to pretend that the central bank has some kind of power, which obviously you're seeing articles breaking everywhere that the Fed, Jason, needs to admit that they were wrong about transitory inflation or risk losing credibility. They're not going to do that. I don't see that happening at all. Do you?
I'm still waiting for them to admit they were wrong about quantitative easing.
What are you talking about? Quantitative easings work great. Just look, they've got almost $9 trillion worth of quantitative easing, But again, I think we're real close here to the bottoms, and I actually expect a very strong rally in 2022. And gold does those things. Silver too. They rally, and then when you think they should keep rallying, and the Fed is using all their quote unquote tools, you tend to see a sell off when you think they should be running. And then the exact opposite. So then when the Fed is supposedly, quote-unquote, getting tighter, that's usually when you see the next leg up, Jason.
That's right. That's right. And, if everything was left to an actual free market, gold and silver would just trail upward slowly with inflation. Instead, though, we got a lot of weird controls and regulations on things. And so sometimes gold and silver will just kind of sit there for a while inexplicably, and then it'll go, or it's supposed to go, Joe. They can't stop an ounce of gold versus a cow sort of deal. They can't stop it. So at some point, after holding it down, it just pops right up there, and it's going to pop pretty soon.
Yeah. We got news on more news on the inflation front. We'll talk about the latest in fertilizer and in crops, and obviously not great news. People now kind of giving up on prices are going to go lower. And I'll tell you what the top fertilizer producers had to say today. We'll talk about crop prices as well. Bank of America, who's starting to get, at least in terms of oil, I'm going to give them some credibility. Whoever their head oil analyst person is has been really spot on about where oil's headed. They've updated their price. The last time I heard from Bank of America about 6 weeks ago when they were calling for $100 oil over the next 6 months. They've updated that price. We'll bring that to you. John Deere workers who have been on strike. Guess what, farmers? I got bad news for you. Buying a John Deere is going to cost a whole lot more. Here's what they've offered the union. It hasn't been agreed to yet. An initial wage increase of 10%. A 5% increases in years 3 and 5. So over a 5-year period, wages would go up 20%, Jason, but they're not done. Workers would get a 3% lump sum in the 2nd, 4th, and 6th years of the deal. So, okay, you're like, wait a minute, 3%, that's 9 more percent. They would also get a ratification bonus of $8,500 just to say we'll take the deal. And there will be no changes in the cost of their health care. So that's I don't know. I don't know if they're going to accept that deal, but at least from reading it, sounds like a pretty good deal.
Do they still build those in America, Joe?
They actually do. They got several.
So, Joe, what I'll say is that this negotiation sure smells like, hey, we'll capitulate, and then we're finding a new country to build tractors soon.
That could be true, too, right? Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. I don't mean to laugh, but I'm just thinking about what Jason said. It could be right.
Yeah, Joe, it's interesting.
Let me say less John Deere plants.
I saw a show the other day over the weekend, and I saw a Lamborghini tractor. Lamborghini makes tractors. And here's the funny thing. You see the heavy equipment on the roads, Joe. It used to be Caterpillar and John Deere. It used to be these companies, International. Well, now when I see the heavy equipment building the roads, everything is Volvo. So it's you John Deere people, you better get it while it's good and get out. That's what's going to happen, Joe. They're going to be making them in China.
You're and again, all of this relates to food prices. We're going to focus on that. We got a lot of news out. Let's start with China. So last night, the Ministry of Commerce told all Chinese citizens to start stockpiling on the daily necessities of food. Apparently, it has been winter has started early in China. They've had a horrible vegetable season. They got torrential rains, wiped out a lot of the crops. Now the cold is on them. They're saying that as far as food items go, broccoli, cucumber, spinach, all of those prices have doubled in just the recent weeks. And they're now saying that they expect winter to be much colder than they were even forecasting. And food's going to be a problem, Jason. I mean, it just is what it is. Stockpiles have already been extremely low to begin with, and now it's any little thing, bad weather, a COVID outbreak in the wrong part of the country, or any of those things. All of a sudden, you got prices skyrocketing higher, and now with China telling its citizens to start stockpiling, I got to imagine things are going to get worse before they get better.
Correct, Joe. And this inflation is obviously the main culprit of why things are wacky. And then, of course, the COVID shutdown last year. But you said it. I think it was either yesterday or late last week about we're not shipping stuff out of here anymore. We talked about the empty shipping containers on the ships and on the docks. We still do ship a lot of stuff out, and if we're not shipping stuff out, Joe, the economy of what's going on in this country is worse. And how are you going to? Who's buying what and at what price, Joe? And food is when food gets scarce. That's scary.
It gets a little scary, and we've been warning for months about what the food prices are going to look like this winter, and you're starting to see these prices roll out. But the world's largest fertilizer producers, Nutrien Ltd., they're the largest. No one makes more fertilizer than they do. They raised their full-year guidance yesterday. It was earnings seasons for them. They forecasted extremely strong crop prices are going to support further fertilizer spending. Prices for potash, that's one of the main soil nutrients, right? Very rich in potassium, continues to increase in all key markets. They're saying record demand. They're also saying that their margins are growing. So in other words, the fertilizer companies are saying, hey, listen, we're raising prices even faster than the prices are being raised to us. Mosaic, they're the second largest, and they are the world's largest phosphate producer, said in its earnings statements, continued upward pricing momentum. And here's the thing that caught my eye. Remember yesterday we talked about the coal producers here in the U.S., that they've already sold out for next year. And they're almost sold out for 2023. In other words, people are locking in at these high prices because they think the prices are even going higher. This is exactly, Jason, what the fertilizer guys said. They said that customers are locking in prices, and they're saying that all the way now, commitments as far forward as the second quarter of 2022, people are locking them in now at record high prices because they're being very honest. They're telling the major companies that purchase the fertilizer from them, prices are rising. Lock your prices in now, and they're saying that they're almost completely sold out through the middle of 2022, Jason.
Totally believable, Joe. Let me give an example of, I sit at the radio station the last few years as I run this place and do the gold and silver shows. About this time of year, usually it's in September and through October, the sugar beet trucks start coming through town. And Sharon used to get really excited about the sugar beet trucks because she's, they're a farming family. But Brian and I had noticed the largest pile of sugar beets we've ever seen. All these trucks are going to one. Instead of going and dispersing to these different places, all these sugar beet trucks are going to one place and processing it all, which to me means it may be going to one source. I've never seen them pile up sugar beets in one spot ever, like I've seen just up the road here from Johnstown.
And it's interesting. You see those weird things, and you just kind of stop for a minute and like, what? What's happened, right? What's changed? What? Why is that? And you could be right. There's a lot of that. We're seeing all the biggest players in the world gobbling up supply all over the place. I mean, just to give you an example, fertilizer's at all-time record highs. And people are locking in, and they're locking in into the future. Same thing, when we talk about wheat prices. Hit another multi-year high today. Cotton, coffee, corn, not soybeans. Soybeans are off the highs, but soybean oil is at record high. And this food inflation seemingly going on unabated. Wheat futures rose another 3% yesterday, hitting almost a 10-year high, $8 a bushel on the Chicago Board of Trade. And here's the thing. It's up 11% in 2 weeks. And this is the problem that we're seeing. We're seeing big gains on already high prices in just the last couple of weeks, Jason.
I believe it, Joe. And that's one thing when you live, my whole life I've driven around these farms and all these crops all the time. And I think the average person living around crops, there's that little feeling of, there's food all around me. There's like a comfort there. There's all these crops. That doesn't work that way anymore. Those crops are bought up, and they could go somewhere in another state or another country, You don't get to have that. And so that's why I say when I see big piles of sugar beets, Joe, it's going somewhere else. When you say food shortages, well, the stuff that we're growing here doesn't look like it's staying here, Joe. That's what I think is going on.
Yeah, and they got bad weather again. Now, Russia, Ukraine, big wheat suppliers. Weather's been terrible. Saudi Arabia just booked a record amount of cereal grain. Egypt also back in the market. So, you're facing global competition.
Yep.
I mean, everybody's scrambling to try to make sure they've got enough food as prices keep elevating, which, again, this leads to what? Even higher prices.
And if you're a country that's more economically developed, you're going to be in better shape because you can afford to do this. And these smaller countries, Joe, when this thing happens, they are going to be in bad trouble. When you talk about actual starvation, it's those countries that aren't economically ready for this.
Yeah, that's a good point. That's going to put a lot of pressure. Obviously the African nations, even some of the nations in South and Central America, the former Eastern Soviet Union countries are going to struggle as well. But there's a lot going on. And really the big thing right now that I'm watching is how far ahead people are booking all of these, and it's not, and again, from energy to crops to whatever it may be, how far ahead they're now booking into record high prices. That just kind of shows you that a lot of these guys get paid a lot of money to be right about these things, and when you see this happening, it just leads you to believe that prices are going to get even hotter from here. And to Jason's point, who didn't book? Those are the ones that are going to be left with possibly nothing to buy.
Yeah, Joe, it's just like we've been saying. It's better to buy 1 year too early than 1 day too late. That's what we're seeing.
And you're bringing up a really, really interesting point. How about this from Apple? The chip shortage problem. Apple has halved their production of iPads, taking the iPad components and putting them into the iPhones, because the iPhones, there's more demand for iPhones than iPads, and they can't do both, Jason.
What's really bad about that is that a lot of the stuff that's being built nowadays is built to be disposable. It's not built to last. So when they stop building the disposable stuff, shortages in those areas are going to show up quick. If you make a computer last, you have it for 10 years, 15 years. But iPads, I mean, how many years does it take before you have to switch out to another one, Joe?
Yeah, man, look at this. This just breaking Bloomin' Brands. That's Outback Steakhouse. Shares are down today as the company reported earnings saying that inflation is gobbling up profits. They're saying they're forecasting commodity prices to rise another 10% for them in 2022, saying they're struggling to keep up with the price increases. They can't raise prices fast enough. And we've been giving these examples, and Eric used to do the gallon of milk example all the time, right? You go to the store, you buy the gallon of milk, it's $4. The store reorders. When they reorder, the guy wants $5. So they raise the price for a gallon of milk to $6. When they reorder, they want $8. They raise the price to $10. They reorder, they want $12. They raise the price to $15, right? This is exactly what we're starting to see a lot as we're watching these earnings come out. A lot of these companies are all saying the same thing. Listen, we raised prices. The Federal Reserve told us this was going to be transitory. Well, guess what? Every time we turn around to reorder, it keeps going higher, and then we raise prices again. Then we go to reorder, prices going higher. Then we raise prices again. Then we reorder, prices are going higher. Bloomin' Onion, Outback Steakhouse. Listen, we expect prices to go up another 10%. It's incredible, Jason.
Yeah, it's where a debt money system really gives the biggest buyers an advantage, because Walmart, for example, can take a loss on these products and borrow some cheap money to float through this while their competition gets destroyed. and then Walmart ends up going to where these prices are on the smaller businesses. It's a plan, Joe. This is the way it's supposed to happen. People don't want to hear that, but this is the way it's designed. This is a debt money system.
Well, get ready. Bank of America, who I said they're gaining my trust at least in the oil market. 6 weeks ago, they said oil is going to be 100. And remember, they were the first ones to break about the people making those bets for $200 crude. Well, they just updated. They're now saying they expect oil prices to hit $120 a barrel in the next 6 months. They just over a month ago, they said that it could reach 100. But that was only if there was going to be a bad winter. It looks like that's going to be true. Now they're coming out and saying, hey, we expect oil to hit $120 a barrel in the next 6 months. They're saying that gasoline, jet fuel, diesel, all of those expected to be at or near record highs as well, Jason.
Yeah, I got the holidays coming, and a lot more fuel is going to be burning, so that could happen by Christmas.
Let's hope not. Patriot Radio News Hour. We'll be back after the break.
Wishing for a Christmas mortgage miracle? Patriot Trading Group wants to make your wish come true. Just enter to win on Family Values Radio website, and you can enjoy having your mortgage paid for a year. That's right. It's the Christmas Mortgage Miracle Contest. To enter, go to FamilyValuesRadio1010.com and click on the banner. Enter once each day to increase your chances to win, and look for bonus entry opportunities. That's FamilyValuesRadio1010.com, and enter the Christmas Mortgage Miracle Contest. Sponsored by Patriot Trading Group. See our website for details.
800-951-0592. And I just want to point out something. You're talking about, okay, we said $100 a little over a month ago. We're now saying 120. That's a 20% increase in a matter of weeks. And you're sitting there trying to plan your business. And just imagine a month ago, you're like, okay, let's just plan our business for $100 oil. Right? And you make preparations, and you're like, okay, well, prices for this are going to have to be, we're going to have to raise prices for this and this and this and that and blah, blah, blah. And then all of a sudden, 5 weeks later, 4 weeks later, hey, I know I told you 100. Yeah, it's going to be 120 now. And the problem is, what happens in another 5 weeks? Are they going to say 150, 175, right? And I think this is really the biggest problem out there. And again, as I'm watching all of these earnings come in, and even look at our ISM reports from yesterday. And they're all talking about we are passing on record prices. But at the same time, they're like, record input costs continue to come in. So the record increase in prices is going to continue because we keep getting record input costs, and we're in this vicious cycle. And then it's so funny, as we're starting to hear more and more from the ports and the Biden administration. Wow, these guys are so clueless. They came up, oh, look, and we said go 24/7. Yeah, and it's going to help. Let me give you an idea. If you took all the ships sitting out at the L.A. Long Beach ports and you just put them end to end, it would go all the way from Los Angeles to Chicago. That's how many ships are out there waiting to be unloaded. There was a Teamster trucker, and here's how he described the ports. He tried to give people an idea. He goes, picture yourself going to Walmart on Black Friday. He said, but imagine there's only one cashier. That's what it's like at the ports.
Oh, man. Mike Rowe from Dirty Jobs, I saw him yesterday. He said if they could get 100,000 truckers hired tomorrow, they would hire all of them.
Well, and here's the problem. The truckers are saying, listen, there's plenty of trucks.
Yeah, he said
We're here.
He said the what do you call the gear that holds the box on it, the trailer part. He says
the chassis.
Massive shortage of chassis right now.
That's the problem. That's a problem. He's saying, here's what they're saying, that truckers are waiting up to 8 hours in the first line. That's just to get into the port. Then you go from that line, they say, once you get in, then they're like, okay, well, you go to, dock A or you go to dock B, right? And then you get into another line where you wait for them to put the load on. And it's like, it's impossible to sit here and look at this problem and say, and I the biggest problem, Jason, there's too many problems. There's not enough crane operators, right? There's not enough chassis. The parts to fix these things are running in short supply now. Now they're saying, hey, we've got too many empty containers. We got too many containers, period. There's only one way to fix it. Listen, it's really not that hard. Really. You got to pay a lot more people a lot more money. Period. That's the solution. We all know it. Right? We need, instead of one crane operator for a line of trucks, we probably need 2 or 3 crane operators for a line of trucks. Well, here's the problem. There's not 2 or 3 crane operators. You got to go and get more. Well, if we get more, that's, the costs are going to go up exponentially, and I think this is the cycle we're in. And again, remember, we said it all the time. When everyone starts getting $15 an hour, you're going to need 30. And this is really what we're facing here. We've got a torrential inflation problem here. And again, I agree with a lot of these people that are coming out trying to say, listen, the Fed's got to admit it. Otherwise, they're going to have a credibility problem. Jason, I don't think there's a snowball's chance, and you know what, of them admitting that we've got an inflation problem. Inflation
is theft. If you ever listen to anybody talk about inflation is theft, and it's a purposeful problem. It's created. Joe, let's look at the Depression versus right now real quick. It's 1929 was the market crash. 33 was gold was made illegal when the Depression was getting worse, and it continued into 1937. It just got worse. Gold went from $20 to $35 after they confiscated it. That's a doubling of price. So just as that one commodity back in those times when there was a market crash and there was a depression, we had our 2020, we had our coronavirus, kind of like a market crash. It was short-lived. The economic conditions are different now, but we're heading for that 1933 situation. And look, the inflation's here, Joe, doubling of prices.
I mean, man, that's just. It's crazy to think doubling, and I think you're right. Look at gasoline, right? Gasoline prices are about 50%. But Bank of America just told you, listen, they're going to double.
Yep.
And I said, I think we'll see $4 gas here in Arizona. I don't know that that's enough. It may be 4.5, could be 5. And if they're saying 120, any little thing makes it 200. Right? A ship, Jason talked about the Strait of Hormuz. An oil tanker blows up. Right? Could you imagine Yemen, another one of these rockets hits a facility in Saudi Arabia? Right? A hurricane comes through the Gulf, right? And oil's already at 120 and it hits in the wrong spot. You know what? We can see 200 just like that.
You know how many military bases the United States have around the Strait of Hormuz? 14. 14 military bases that are within striking range of that specific place, Joe. It shows you how fragile things can be on just one bad thing.
Well, and I think this is kind of really where we're at. We're one misstep away from the central bank's perspective. Again, I fully expect tomorrow that they will announce the start of tapering. And again, not because they want to. Again, try to push the transitory line. What's going to be interesting for tomorrow, I think anyway, is what they say about interest rates. So far, they're like, hey, we're going to taper. That does not mean we're raising rates. Let's see if that changes a little bit. That'll tell you how scared they really are. Patriot Radio News Hour. We'll be back after the break. Eight 800-951-0592, Patriot Radio News Hour. Got a pretty good deal today. U.S. $20 gold pieces, $2,075. So that's $25 lower than yesterday. Gold's down about $3, $17.92, $17.93 right now. Silver, we're close. I'll have something tomorrow on silver. So if you're waiting for an opportunity on silver, that's going to be tomorrow. Today, and again, we don't know what the Fed's going to say. I think they're going to announce taper tomorrow. I think the key for tomorrow potentially is going to be what they say about interest rates. In the past, and this is how fast things move. They have these meetings every 6 weeks. This is how fast everything is changing. 6 weeks ago, it was like, hey, we're going to taper, but that doesn't mean we're raising rates. Everyone calm down. We're not doing that. Let's see if that changes tomorrow, Jason. Because if it does, I think that's going to signal that inflation's going to be a whole lot hotter than anybody expected.
One of the reasons I don't watch these meetings is they're so dry and hard to watch. But I think
they're unwatchable. There's no doubt. I mean, they come out, and it's so funny because to hear them talk, if you really understood what the ramifications for your own household were, you would want to punch Jay Powell in the face.
Yes.
I mean, literally. I liken it to take your favorite team, your favorite sports team. You're a Broncos fan, Cardinal fan, right? Cardinal fan, they threw that interception in the end zone to lose to the Pack. I mean, how mad were you? Right? You wanted to just kill A.J. Green, right? And blah, blah, blah. Bronco fans today, how upset are you that they traded Von Miller? Right? This is how mad you would be if you actually understood what Jay Powell and Janet Yellen were really talking about.
Right, Joe. So in their dry, bland way, I think this is what I think. Well, we're looking at raising rates, and we're gonna really think about it a lot. And now we've set a date in the future when we're going to taper. I think that's
right. We've set this date, and remember, taper isn't where they're actually reducing their balance sheet. Oh no, they're still increasing it. We're just going to increase it a little slower.
I don't see how they can do it, Joe. I don't see how they can do it.
The lowest prediction for crude oil right now is about $100. That's the lowest. And you're talking about slowing purchases? We've got record high or decades high prices in almost every major food category. All of them. Not just one or two. All of them. You have every major report from manufacturing to ISM to earnings coming out from these companies to the beige book. I mean, you name it. Every major economic report says the same damn thing. Prices are rising faster than we can raise prices. And you're sitting there saying, well, we're going to slow our purchases down, which just tells you, we don't want to fight that. We don't want to do that. We want your money to be worth less, period. I think with Jay Powell and Janet Yellen, you know what they love to see? They love to see all these. That's it. Book them now. Book it. Book it all. Book all your stuff for 2022 and 2023. Lock them in now because prices are going higher.
Yep.
Prices are going higher.
$5 an ounce for a bite of crab legs.
Right, for a bite. Every bite of crab, that's $5.
$5 an ounce.
That's $5 more.
Yeah.
Right?
$5 an ounce.
Really,
It's amazing to hear that you're going to take a bite of a crab leg and it's $5.
And it's really, truly amazing when you really think about what it is that they're trying to tell you. First, 1 year ago today, they were telling us there wasn't going to be any inflation. Right? Modern money theory, whatever they wanted to call it, MMT. Remember that nonsense? But then it was just going to be transitory. And then remember Janet Yellen this week, oh, well, we can still use transitory. So what if it's lasted longer? Well, the whole part about being transitory, it's supposed to not last that long, and then prices are supposed to go back. We're never going back. Look at John Deere's contract proposal today. That ought to tell you all you need to know about prices going back. It's never going back. Costco started the year paying $15 an hour. In February, they made it $16. In October, they made it $17. Why do I got the feeling that sometime late next year, Jason, it's going to be 20?
Because that's where it's headed. And it's funny. It's got to be really a nice, calm feeling to work for the Fed, Joe, because let's just say Jay Powell makes the biggest, dumbest mistake in all of Fed history. They'll just fire him, and then the next day there'll be this huge digital money account that'll be boosted to huge ends. They're just the face for what the Fed's doing. That's not the actual Fed. It's just the guys running it. And it's got to be nice to work for the company that actually creates the money. You can't lose. No wonder they're so relaxed and dry and boring and tired. They don't have to worry about anything.
They give you free food. You get free food in the cafeteria at the Fed.
That's right.
What inflation?
Fry crab legs, Joe.
Final segment coming up. 800-951-0592. U.S. $20 gold pieces, 2,075. Right on the cheaper end here where things have been. We'll know more tomorrow afternoon as to is it taper. We're going to buy a few less bonds. But more importantly, are they going to stick to transitory, which I almost can guarantee that they are, and then anything about interest rates. And remember 6 weeks ago it was, we're gonna start taper soon, some date in the future, but we really don't plan anything on interest rates. I wonder if that's going to change at all, Jason.
Yeah, like I said, I think they're going to keep kicking the can down the road until the can's completely smashed. That's how I see it. So I don't see how they're going to the interest rates being raised or tapering. I mean, you're right. Tapering is just lowering the purchases. You think this is something that'd be achievable, but when you have the Ponzi scheme, it's so long in the tooth, the Ponzi scheme, that
and it just drives you nuts, doesn't it?
Yeah.
I mean, look at the inflation now. How are you not just saying, you know what, that's it, we're done? Right? We're not going to buy this stuff anymore because it makes the problem worse. But here's the realities. By buying less, believe it or not, see, this was their way of keeping money out. Right? To try to keep money out. All this money they created, it was kind of a fake way of keeping it out of the actual economy. By ending taper, you're actually putting more money back in. And really, the funny part is, it's going to probably make inflation a little worse, but they've got to end taper first. They got to get that bond buying to zero before they can even raise interest rates.
I don't think they're replacing the amount of bonds that are coming due, Joe. I think that's a problem. Like, it's a Ponzi scheme. You have to increase. So how can you taper when you need to increase? Because I don't think China's buying a lot more. I don't think.
Well, you know what's so funny? The Treasury, we know this. They're out of money. We're in this emergency, waiting for a debt ceiling hike at sometime in December. They're going to sell $1 trillion worth of bonds. so they can restock the Treasury Department, get it back up to around $500 billion, and then, of course, the other $500 billion is going to be spent. So there's $1 trillion of issuance coming. It's kind of interesting. I think they're in a terrible spot. The realities are you've got to listen to this station and these programs to actually understand what a bad spot they're really in.
Correct. And with the shows that are on this station, they're going to give you a little help in all areas on how to prepare for things like this. And Joe, we were just talking this morning about how many new listeners are coming in and listening to what's going on through this station. And I don't think that we're going to lose those listeners. I think it's going to keep on growing because this is information people need to have. I mean, what celebrity is doing on this day or that day, or if Alec Baldwin killed someone on purpose or if it was on accident, eventually that information doesn't really matter when it comes to how is this going to help my household.
Yeah, and it's going to be a wild ride. I think the next really 6 to 8 months are going to be very, very interesting as to where we're headed. We've already had a big slowdown in GDP. The Biden administration seemingly can't get the infrastructure bills passed. We have inflation skyrocketing. We've got shortages pretty much across the board. Almost textbook definition of stagflation seems to be upon us. 800-951-0592.